From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 29th, 2016. Today we're going to be taking a look at the USDJPY, the US dollar versus the Japanese yen, for today's trade analysis. But first, a recap of one of the trade suggestions made yesterday was the AUDUSD, the Australian versus the US dollar, looking for a sell on a rally into resistance. Now, we did get stopped out of the trade on some OPEC oil agreement news yesterday afternoon, but the market then turned around and went back in the direction that we have been trading it. If you were able to stay with it, if you had a higher stop loss, and maybe you stuck with it, and you may now even be seeing profit on the trade if you stayed with it. Otherwise, taken out of the trade, fortunately, didn't eat into all the profit. We didn't go into a negative position for the week, but we did see the stop loss taken out on the Australian dollar on the OPEC oil news. Let's go ahead and zoom it in a little bit here on the daily time frame, a couple of times here. And you can see we were in the sell from the blue shaded area, right around the middle of the blue shaded area. The market went up, took us out, and now has gone right back down, even pushing underneath the 76.70 level now for the Australian dollar. So unfortunate that news drove it higher and then reversed again. But again, hopefully if you stayed with it, you're in the profit now. If not, we'll look for a new opportunity to get that profit back at some point over the next few days. And it could be the US yen. Let's take a look at this currency pair. We do, of course, have some news on the calendar today, coming up in about half an hour from the recording of this video. Some GDP data and unemployment claims out of the US coming up. And then later on today, 4 p.m. Eastern US time, we have the Fed Chair Yellen speaking again today. So that could, of course, produce some volatility. And then much later, 8 p.m. Eastern U.S. time, Bank of Japan governor speaking as well. So we have some potential volatility on this currency pair, but I think if we're trading in the right direction, we might be able to see some profit on this currency pair. First off, starting here on the daily time frame, take a look at the long-term trend. It's clearly down. It's been down for a long time. We've seen rallies into the trend line, multiple rallies into the blue trend line, and falls off of it. And there's a couple of things I'm cautious about, of course, is we're at the very bottom of a multi-year trend, or a multi-month trend at least. We're at the very bottom. It has challenged the 100.0 level over the past couple of days, unable to break through it. So that's given me a little bit of a pause on going short because we have been unable to continue the downtrend. But I don't see any real significant long-term evidence of reversal. It has gone up a little bit over the past couple of days, but I think it would need to break the blue trend line and make a significant higher high, higher low before we can really call this reversal to go back higher again. And of course, today's news and speeches from the Fed chair and Bank of Japan governor could change all of this, but at least for the now, everything is pointing still to the downside based on this long-term daily trend line. Take it in, zoom it in a couple of times. There it is, today's candle pressuring higher into the pink shaded area. 101.35 to 101.60 is the pink shaded area. And one significant thing that I would point out about that pink zone is the supports that you see back here inside the blue circle on the left-hand side. Those supports tell us that this pink zone is a decision zone. It's a zone where the market has made a trading decision before. Well, that on the left was support, where the sellers exited and buyers entered. Eventually it broke through it and went lower, but it's a decision zone. That's really what's most important here. And of course, down today, we're in that area again and has the potential for decision to be made here. And of course, like we said, there is the long-term bearish trend that we're talking about. Some U.S. data at 8:30 Eastern U.S. time. Fed chair, the BOJ speaking today. So lots of things could influence this currency pair today. But what we often look for is low risk and high reward. We never will have no risk. There's always the risk that the market does something we don't expect to do. Yesterday's OPEC news on the Australian dollar is a good example of that. So here we are into the pink zone. We make a trading decision that has lower risk and higher reward. Let's take one simple fib from the last high right here where it touched the blue trend line in the middle of the chart down to the current low. And by doing that, we find a 382 Fibonacci retracement level sitting at 101.69. We can call it 101.70, just at the top of today's candle. So 382 sitting there at the top of the pink zone. We know the market's found decisions here before. We're into resistance. So definitely a place that we want to consider as an opportunity to go short in the direction of the long-term trend. Now again, I think if it breaks the pink zone, we're looking for it to go higher to the yellow zone, but this is our decision zone today. Take it down to the 4-hour time frame, zoom it out one time so we can see some more history. There's that blue circle, there's support here, here we are again into that area. Take a look at our previous candle, small blue body, long wick on top, showing that there are some sellers that are interested. That's what that kind of candlestick represents, the small body, long wick on top. Tells us that there are sellers that have infused into the market at that point. There's price action that indicates there are selling interest here for the currency pair into the 101.50 level. The mid part of the pink zone is 101.50. So I have set up a pending trade there at 101.50, right smack in the middle of the pink zone. If it starts to turn lower underneath 101.35, we'll look to target back down to the blue zone or lower, maybe even all the way down to 100.0, the green zone at the bottom of the chart. So what's the risk? You know, we always want low risk, high reward. What's the risk? The risk is a push above here, and again, likely above 101.70, which is that 382 Fibonacci retracement level, and today's high. Today's high, in fact, the last candle there shows us today's high is 101.75 or so. So if we get in at 101.50, we definitely want our stop loss above there. I'm saying a 35 pip stop loss definitely would protect us here in case the market does break out above the pink zone, because as I mentioned, if it gets above the pink zone, history shows us, just look to the left a little bit above the pink zone, we're back to the yellow or possibly even higher into the 103s all the way up here at the top of the chart. So that's not what we want to do. We want to see it stay under the within and under the pink zone, head back down in the direction of the long-term trend. A break of the pink zone changes everything. Of course, news today could change everything anyways here for this currency pair, but that's what we'll focus on today for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.